That's the other one which is in focus, and they've come out with a very strong quarterly update with overall growth in the late 20s, driven by its younger brands portfolio, which continues to outperform. Staying is here with the highlights.
Well, yes, so good update coming in from the house of Honasa Consumer for Q4. In their update, they have mentioned that they expect the overall business to grow in late 20s, driven by strong growth across their focus categories. They've given a separate metric wherein they say on a reported basis, and they say reported because there has been some change in the revenue recognition at Flipkart. So on the back of that, if you adjust for that, reported basis growth is also expected to be in the early 20s, which is very strong for a company like Honasa, because remember last quarter this number was between 15 and 16%. So in the early 20s, growth is good on a year-on-year as well as on a sequential basis. Now talking about their segments, they say that Mamaearth is expected to grow in teens, which is good, but the better performance is expected to be seen from the younger brands, which involves portfolios of the companies like the Derma Company, Aqualogica, Be Blunt, Dr. Shades, Stays, as well as Luminev. All of them are combined expected to deliver growth in the mid-20s. They grew at 25% in Q3. So now we're going to be watching out for if this mid-20 number is able to cross 25 or if it's around the 25 to 26% mark. The offline channel has remained a key growth driver. Meanwhile, general trade and modern trade have also continued their strong growth momentum. So that's on the trade channels. Remember, this is also the first quarter. It's the first entire quarter for the BTM Ventures acquisition to be taken into accounting. Remember, this is a parent of Reginald Men and Molecular Company. A couple of quarters ago, Honasa Consumer has acquired these companies. And this Q4 is the first full quarter of accounting, and they are also expected to do very well. Now, lastly, on an overall basis, Honasa Consumer says that the overall operating profit margin is likely to be sustained. Last quarter, after Q3 earnings, they had given a guidance of 70% plus gross margin. So we'll see if they're sticking to this guidance or if they're hiking it. But overall, in a nutshell, that is everything that Honasa Consumer has reported for their Q4 update, looking largely strong.
Looking largely strong. Kunal, let me throw in an Eternal, Swiggy, Honasa, some of the new age consumer tech kind of companies. Throw that into one basket and ask you how are they looking like on charts and your favorite.
I think Honasa after today's move, I think looks very, very strong because, today it's managed to come out of almost like a 1.5 odd year of, maybe I think 16 months approximately of a huge underperformance for itself because I think in the second half of 2024, the stock had gone through a very sharp correction. There was a huge resistance at the 320-25 mark for NASA, and the stock today has managed to surpass those levels. So this could be a very, very strong chart in the making over the medium to long term because we've seen stocks when they come back into a sharp recovery phase after maybe weeks, months, in this case, many months of consolidation or price correction, the trend looks to be sustainable from a medium to long term perspective. So Honasa, I think in that context looks to be quite attractive. Eternal, we've been highlighting over the last, I think, few weeks that closer to this 210 to 15 mark, there was a very strong risk reward where the indicators were oversold. So I maintain the positive stance on Eternal over the near to medium term. Yes, the stock is consolidating at the current juncture, but the trend is still positive for Eternal.
Reading on the charts and Eternal.